Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, January 13th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. Please do your own research and your own due diligence on any ideas that you hear. It's your money. It's your responsibility. Okay, so it's obvious that this was going to be the lead for this week's video, as we see that, uranium now has crossed the $100 a pound threshold in pretty dramatic fashion, as a matter of fact. We've had some pretty big moves in the uranium price in the last couple weeks. A lot of people were lamenting the fact that they didn't feel that the uranium stocks were responding in a corresponding nature to what was happening with the uranium prices. And I think that kind of changed Friday also. I saw many stocks, especially some of the trading sardines, were up 20, 30, 40. I think I saw one stock that was up like 100%. The more legitimate companies, more, mainstream companies, the ETFs, the SPUT, that was up 7, 8, 9%, something like that. So if you look at some charts, it's definitely some gaps, breakouts. So there's a lot of chatter on X and in the uranium sphere, Urana twit sphere, whatever you want to call it. But nevertheless, this is a pretty substantial achievement. This will draw more interest. These round numbers, when you cross them, have a tendency to bring more people in. What I find fascinating is that, again, people start, not everybody, but a couple people you see here and there. Well, we need to start thinking about selling. When's this going to end? Is this the top? I mean, we're just simply not anywhere near a top. The supply demand situation is completely skewed to more upside prices. And we've said that before. The other thing I think you need to keep in mind with the current uranium price is that what I have said in the past is I fully expect the uranium price to achieve and surpass the previous highs of the last bull market. We want to call the last bull market $135, $140 a pound, something like that. The thing you need to take into consideration, some other people pointed this out, DMs to me and also on Twitter, $140 and $24 is not the same as $140 in 2006 or $07. So what I have said in the past is that I fully expect the all-time price to be exceeded. And if you inflation adjust the price from the previous bull market, you're talking somewhere north of $200 a pound. Do I think that's achievable? Yes, I do. Do I think that's going to happen? That's what I think will happen. Do I know the time frame? Absolutely not. Couldn't tell you. Could happen in a couple months, could happen in a couple years. It's impossible to know, but I do think that will be achieved simply because of the fact that we're seeing more and more information that this supply crunch is really is starting to bite now. And this is what a lot of folks expected. Now, again, I will go back to what I've said in the past. There is no shortage of uranium in the Earth's crust. There's plenty of uranium, and at certain prices, there's an unlimited supply of uranium dissolved in seawater. There's all kinds of things that can happen. Will they happen in a time frame that will alleviate this particular, what I think, historic bull market in uranium? No. So the price will spike at some point. Some kind of event is going to happen. I'll get into some things that happened in the last week that I think are going to be further catalysts for higher prices as it begins to sink in that we simply, this isn't like the last bull market. And again, you need to remember also that this is really a tiny market. This is not that big of a market, and it doesn't take much capital to get it moving. And we really haven't seen mainstream funds come in yet. The big money hasn't come in. There was a couple of people, even on the Discord that we have for the Actionable Intelligence Alert newsletter, people that work at big investment firms that have floated the idea, and basically not much interest from their peers. Still no interest at those levels. Do I think it's starting to seep in? Yes. Do I think, going over 100 in a round number will get more media attention? Yes. Do I think that, this is a process, right? As we move through this process of this bull market. So momentum begets more momentum. And so, yeah, I think that this isn't the top. I wouldn't even be, there's not much to do. I mean, if you don't have a position, then is there still meat on the bone? Yes, this is, but it's not the feast it was a couple years ago. I thought it was interesting. Somebody posted a link to one of my first interviews that I did with Malcolm Rawlington about 4 years ago, when we had like a 2-hour discussion about all this and kind of playing out the way that he said it would. So I feel pretty good about that. We really got this one right. It took a while. There were points of doubt. I can remember just sitting in my pool, floating around, just lamenting, like, is this going to really happen? This is back when, prices were substantially lower than this. And, I'd always go back to the fundamentals. What were the fundamentals? Did they change? And understanding that with the fundamentals so skewed, relative to supply and demand and what was going to happen, and the confidence that I had that the entire zeitgeist would change towards nuclear power, which it has, then that kind of gave me that conviction. So I'm feeling pretty good about what's happening. I'm not going to sit here and pump it. There's plenty of people that do that. But this is pretty significant. And I think that, you had a pretty big move last week. A lot of the stocks are pushing up their upper limits of RSI. They're really overbought. But so, again, if you have zero holdings, then you may want to wait for a pullback. You may want to wait. But, do I think there's a possibility this could run away too? It's possible. I mean, it's, the future is completely unknowable. All we can kind of look at is like, like I said before, what's the probabilities to forecast based on the information we have now? And I can confidently say that we're going a lot higher, at some point over time. And I think that you are starting to see, though, you will start seeing, as the price goes higher, capital will come in, and high prices do cure high prices. Eventually, enough capital will come in to close the gap, because the incentives are going to be so high that, the money will flow in. You've already saw a facility here in Texas restarted recently. I mean, these aren't major contributors, but it's starting to happen. The gears are creaking on the machine. It's starting to, wake up. So we'll see more of that. But having said that, this is part of the problem. This is what I think. This is kind of what you see in mining, right? So Kazatomprom issued some guidance late last week, basically saying that their 2004-2005 production targets are in jeopardy of shortfall. So this is from Bloomberg. And we've talked about this before. We kind of indicated this before, but they kind of verified it now. This was floating around out there. There had been some discussions about this back in the fall, but they have officially now come out and said this. So basically what they've said is, Kazatomprom says sulfuric acid shortages impacting output, because, it's ISR operations that they primarily have. And uranium prices have soared on demand boom, supply setbacks. Says Kazatomprom, the world's largest uranium miner, warned that it's likely to fall short of its production targets over the next 2 years, adding another risk to supply as demand for the nuclear fuel rebounds. The London-listed company, which is controlled by Kazakhstan's government via its sovereign wealth fund, said on Friday that shortages of sulfuric acid and construction delays at newly developed deposits are creating production challenges that could persist into 2025. It will outline the likely impact on output in a trading update by February 1st. So they're having issues. The world's largest producers having issues in an already undersupplied market. And what is it? It's just the same thing that always happens in mining. It's very difficult to mine and to stay on schedule. They don't have enough sulfuric acid, which they need for their injection wells. They have construction delays. Is that because of suppliers or labor? I know that Justin Hune was on Macro Voices last Thursday, and he was talking about the same thing about building out all these mines and the labor shortages, the skilled labor shortages that are going to be an issue. So as this thing ramps up, I go back to saying this before, that was even true of the last bull market. How many competent uranium mine building teams are out there? How old are they? I mean, you got guys on some of these things that know what they're doing that are in their 70s. So, that's not saying that younger guys can't do it, but I'm just saying the corporate knowledge, is it there? Will they make mistakes that other guys wouldn't make? They're going to cost money and cause late. So I'm saying to you is it's not as easy just to say, well, here's a spreadsheet, and if the price goes here, these mines will come back on. But what does that mean in the real world mechanically for the guys on the deck plates trying to get the thing up and running? It's more difficult than people think. And so you have to bake in a certain amount of delays and shortfalls just based on that. And this is happening to the world's largest producer. So what does that mean for some of the smaller companies? We'll just have to watch what happens. But I think that's just another catalyst or another piece of, tailwind that will help, restrict the supply or elongate the move because of the supply response being restricted based on all these different things. Not one single thing is going to do it, but this culmination of all of these factors will lead to higher prices. And so we'll see. I mean, again, I think we do at some point get to a musical chairs environment where somebody suggested on Twitter the other day, somebody's just going to come out with an RFP and just with a 2 handle on the front end of it and just say, okay, I want 3 million pounds or 5 million pounds, $200 a pound. That's a possibility. Somebody suggested that could happen, to really just like suck up what's out there. So there's a lot more to talk about. I don't like to get too far into, what if this happens, this could happen, and get the juices flowing. There's enough of that on Twitter. This is a pretty big milestone of crossing 100. We went through it pretty quick. And then this news comes out, which is just more rocket fuel for the move that I anticipate happening over in the future. So it's starting to go mainstream. This was on Bloomberg. I just grabbed the headline. This will pull in, the fast money, especially if, when you see things gapping up and things moving, people that like to trade momentum or see something moving, it's going to get their juices flowing, right? So this is right from last Friday. World's biggest uranium miner warns of production shortfall. We just talked about it. Kazatomprom, and then uranium prices have soared on demand boom, supply setbacks. So just giving you a flavor of the sense of how it's getting out into the mainstream. Goran and Rosen had a blog post, which I'll put a link to in the show notes down below. Just a couple things here, talking about uranium. They've been on this. I mean, again, if you're not reading them and you're a resource, you're interested in investing in resources, I mean, they put out these 35, 40-page documents every quarter into different facets of the resource markets and what they see. So they've been pretty successful over time, and I really enjoy reading their information. But this is just a couple snippets out of that blog post that they put out last week. It says, although supply will ultimately undo the uranium rally, it will take years to ramp up. Given years of chronic underinvestment in the industry, prices will likely move much higher. We leave you with a prediction. As U.S. utility buyers realize that decades of ample secondary supply are gone, they will panic, scramble to secure volumes, and drive prices much higher. Eventually, they may induce to approach the various financial vehicles, including the Sprott Uranium Trust, to seek the uranium they need. Ultimately, they might be forced to pay large premiums to spot prices to secure long-term supply. We believe this will likely mark the top of the uranium bull market. This could be many years away. Until then, we believe the uranium price rally will persist. And so there you are, folks. This is a totally different market than what we saw during the last bull market. We have supply deficiencies. We have reactors being built, and it's accelerating. We didn't have this during the last bull market. We basically had a mine flood that was a catalyst. This is a totally different market. This is a chronically underinvested in market, undersupplied, and in the midst of basically what's starting to amount to a complete worldwide change in views towards nuclear, which I believe will lead over the next several decades to a massive, massive nuclear power plant build out. And so there you go. You have all the recipes for something that I've said before. You know, I'll be honest with you, this bull market in uranium has changed my financial status. I'm not going to give numbers. Let's put it this way. It's been very, very lucrative. I expect it will be the same. This was one of those things that, you know, I wanted to, you read about, you know, how getting the right thing right over a period of years can financially change one's life. This has happened to me, and I suspect it's going to continue just based on what we're seeing. Now, you know, the caveat is, again, ultimately, supply will come on, but it's years. You need to remember that it's going to be years. It's not something that, man, if I get into this in 6 months, are they going to flood the market? You know, that used to be one of the canards that was put out there by uranium bears, that Kazatomprom is just going to flood the market. It's a state-owned entity. And once prices get high enough, they're just going to turn on the taps and flood the market and kill this rally. Well, they're not able to do that. That's not going to happen. And so we'll see. You know, again, if you listen to the Macro Voices Justin Hune interview, they kind of talk about some of the big projects that are coming online, and like Arrow in Canada and things like this, Next Gen's project. But these things are years away. Okay. So we'll see. And then again, during the process, is it going to go by the numbers completely? So if somebody says, well, I'm going to build this mine in the next 5 or 6 years, is it actually 7, 8, or 9 years? Because again, all these unfortunate things seem to happen during the process that push back the time frames. And I suspect that we're going to see more of that. So anyways, just wanted to bring this up. It's a good read for you to get your uranium fix for the weekend reading. Links in the show notes. So again, on the demand side, you know, this is what I'm talking about, the zeitgeist changing. Here's a headline. UK releases roadmap to quadruple nuclear energy capacity. The British government has launched a roadmap for reaching its ambition for the UK to have 24 gigawatts of nuclear generating capacity by 2050, representing about 25% of the country's projected electricity demand. So there you go. That doesn't mean it's going to happen, but you're seeing more and more of this, right? This is more wind in our sails. You know, we jump over to France. France this week dropped its renewable goals, okay, for its energy policy, and it is going to focus on nuclear to, quote, ensure energy sovereignty. France drops, this is the, I'll put a link to the article, you can read it. This is the headline. France drops renewables targets, prioritizes nuclear and new energy bill. Critics are deriding as a step backward a new French energy bill that favors the further development of nuclear power and avoids setting targets for solar and wind power and other renewables. So the thinking has changed. You know, we talked about this in videos maybe over a year ago that we were at peak ESG. People now are have done the math and the physics. They've looked at their comparative advantage. Why would France, who is a leader in nuclear power, with all of the nuclear plants they had and what it's for that done country, why would they want to not use that advantage that they have and all of that infrastructure and schools and engineers and operators and all that stuff and go to solar and wind? It makes no sense. And so you know, it doesn't pencil out. And so that's what we're seeing more and more. That's why the UK wants to build out nuclear. That's why you're seeing nuclear being built out all over the emerging markets. I'm not saying that the renewables don't have a place. They'll have a place, but they will not be the panacea. They will not be, we will not run the world, an industrial technological world that has an ever-ending need for increased energy inputs. We will not do that with renewables 100%. It's just not going to happen. So shifting over to the economy, this is from David Rosenberg. Every recession followed a peak in the Fed funds rate. Every recession. So again, this is all about timing at this point. I know that this is a new era. That's what we're told. Just because something hasn't happened doesn't mean it's not going to happen. Now, the criticism will be, well, being wrong about it or being early on predicting a recession is just the same as being wrong. My portfolio has beaten the S&P the last 3 years. Now, granted, it was, I beat it by 0.01% last year, but nevertheless, I think there's something to be said for that. And so we'll see if this is a new era, if we're going to be able to short circuit the business cycle, if we can just print money and throw money at uneconomic malinvestment, like building chip factories in Arizona that aren't ever going to run. If that's really the way that you can have a sustainable, efficient, and well-run economy, we'll see. I don't believe in central planning. It never works. It won't work. And so we're spending a lot of money out of nowhere, but you can't do that forever. And so we'll see what happens. I think people are going to be disappointed. The inflation numbers were not conducive to the Fed being put in a situation where they're going to have these rate cuts in March. And I think as that gets pushed out further, and the market comes to terms with that these rate cuts aren't going to happen like they thought, that's going to change the dynamic in these markets. So we'll see. Again, we can get into tit for tat on different, everybody's favorite indicators. I can throw out, or David Rosenberg, or anybody can throw out these negative things, then somebody will come back with a positive one, and we can go back and forth. But what are we looking at in totality? What is the catalyst for this economy? What is the impetus for growth, except for spending by the federal government, this huge deficit spending, which is basically at a wartime level deficits? Is that really sustainable? I get it that we're in a presidential election year, so we can expect them to pull out all the stops, but at some point, the piper has to be paid. And again, you can see these periods where rates rose, the Fed took rates up. You can say here they didn't have a recession here in 94, 95, but you could see, what's happened. So maybe this is 95. Maybe we're not going to have a recession. Or maybe we have what some people say is going to be rolling recessions. I mean, manufacturing's been in a recession. The leading indicators now 20 months. So that pushing all that federal fiscal stimulus into the economy, but that's they've had to take their foot off the accelerator. We're not going to get the same level. We're going to continue to get that, but not the same level we did. So we'll see, right? We'll see if central planning can overcome markets. So these this next few charts are from Game of Trades. Follow them on Twitter. I like them. So this is courtesy of them. So you see like delinquency rates of multifamily housing, Freddie Mac serious delinquency rates for multifamily housing. You see what's happening. It's going, we're seeing things go up. Again, this is, people say, well, that's multifamily housing. What about single family homes? What about the totality of real estate? So we can get into the battle of the stats, right? I'm just pointing these things out, reporting them because I find them interesting, because I think with taking rates, Fed funds rate from 0 to 5.25, and then mortgage rates into 7.5. At one point they touched 8%, just aren't conducive to, because prices haven't come in for real estate significantly. That's just that's an eventuality in my mind. Again, another chart from Game of Thrones is we expect job loss claims to accelerate. This is basically showing you the previous index growth and initial jobless claims in the 24 months following 8 episodes of 10-year to 2-year U.S. Treasury yield and curve inversions. And you see that we're getting, typically what happens in the 24 months basically we are underperforming on jobless claims at this point for, I think, a lot of reasons. But we're in that window where if this is going to start accelerating, we should start seeing the accelerations. Okay. And again, we'll see what happens. This is back when the yield curve inverted. And you see other instances where we're tracking. They don't have all the dates put out here, but this is these different 8 episodes. But it kind of illustrates the point. We are below what we've seen in the past, but we're still consistent for overall at least some other time frames. So we're getting into that window of that 16 months to 24 months when things really, if it's going to happen, it's going to happen in the next 6 to 8 months, but we'll see. So I wanted to point this out about coal. Coal's not going away. I am bullish on coal long term. Obviously, there is some cyclicality to it, which I think you have to be aware of. But, as I see the world's central banks now, a third of them are in easing mode. I expect an acceleration of the, as this money's put into the economy. Eventually, the OECD countries will be, Europe and the US will be cutting rates along with the UK and Canada, eventually Australia, just a matter of time. And so I think we're going to see, again, that energy demand accelerate over time, especially in the emerging markets. And the 2 primary burners of coal are China and India, and that's going to continue. Link to the article in the show notes. World's 2 largest coal consumers won't be weaning off the fossil fuel anytime soon. Global coal use in 2023 has hit a record high, surpassing 8.5 billion tons for the first time, on the back of strong demand in countries like India and China. China and India's growing economies will continue to fuel demand for coal, even as they set ambitious renewable energy targets, according to experts. Quote, if India, China are still growing economically at decent rates for the next decade, we're not going to see coal demand disappearing anytime soon globally. Ian Roper, commodity strategist at Astris Advisory, told CNBC. So this is our thesis too. Again, I think you have to be selective. There's opportunities out there. There's companies like, I think it's Arch Coal. I mean, there's really been some shareholder friendly policies that have returned a lot of capital, and the stock prices have reflected that. And so I think that coal's going not anywhere. It's not just China and India. It'll be a lot of country, Pakistan, Bangladesh, Indonesia, Japan still has big coal plants. So I don't think it's going anywhere. But what I find interesting is this constant pressure, and especially these ESG mandates that a lot of the banks, pension funds, insurance companies, finance people have signed on to, that they're not going to finance these new mines or these plants. Well, that's fine. The emerging East and South will do it. And so the coal will be mined. It will be burned. These governments have mandates to increase the living standards of their people, and that's what's going to happen, regardless of what people in the West think or want. I find it interesting. I go back to this is kind of a side note. I just want to get into it a little bit. No one cares what the U.S. says anymore. If you are the way I'm looking at things, and I follow this, we're launching cruise missiles at Houthi rebels in Yemen, who have basically shut down the Red Sea and Suez Canal transit point from a large portion of shipping, to the tune of 16% of world commerce. And there's not a darn thing the coalition of the stupid can do about it. Yeah, they threw some tomahawks at them. That's not going to do anything. So, the neocons, have got you guys in 3 wars. You look ridiculous in all 3 of them. Everybody just forgot about Ukraine. Okay. At best, you could call it a stalemate. At worst, Ukraine's being attrited. You want to go to Israel and Gaza? You have a few governments standing with Israel, and the rest of the world is standing with the Palestinians. That's why you have this Houthi situation. And so the neocons want their war. They have a compliant vegetable in office currently, with a lot of neocons around him, like Newland and Blinken and all these people. And they really want this war with Iran. And so they're going to do everything they can to get this war with Iran. In the meantime, your costs are going to go up because shipping now has decided not to go through the Red Sea and is going around, Cape of Good Hope, Southern Africa, extending journeys. I mean, tanker and shipping stocks are going up because rates are going up. What is their plan? What is the plan? What they're doing is it shows strength. I mean, the rest of quite a few other countries didn't want to be involved with it. So you've got, the US firing some Tomahawks. Is that really going to work? Look at the amount of missiles that have been fired into Ukraine by the Russians. Have they degraded the Ukrainians? Yes. So what's the plan? Do you think they're still in the fight? You still think that these Houthis, who basically are like a tribe of people that relish fighting constantly, I mean, they were in a war for 10 years with the Saudis, with the rest of the Emirates and the United States supplying Saudi Arabia, and they didn't lose. Okay. So standoff weapons, firing a few Tomahawks in there for a few days isn't going to solve the problem. And so it just looks weak. And so what are we going to do? Start dictating to these countries not to burn coal, or what? Or else what? We're going to put sanctions on you? Nobody cares. The hegemon is like melting away in the sun. Okay. And so the age of chaos continues and accelerates, and the US cannot enforce its Pax Americana anymore. Now, people will disagree with me, but we'll see. We'll see. So this was an article by Art Berman. Some people like Art Berman, some people don't. Basically, he wrote an article the beginning of the end of the Permian. This is just showing the curves on wells in the Permian, and you can see, points out 21, 22, 23, where they basically start, and basically says production levels are already lower than in 2021 because of higher decline rates. And you see that it's obvious that the Permian is declining. And this is the thesis. That doesn't mean that it's going to stop producing. It's just all oil fields go into decline eventually. And so they're not able to produce. And then you should read the article. It goes into a lot of other things. Like I said, a lot of people don't like Art Berman. They don't agree with them. I just put the information out there. I thought it was thought-provoking because it's the same thing Goran and Rosenzweig has said also, that the Permian is going to, it looks like it has peaked. And if it has, this is a problem going forward because of what happened in the shale fields in the US over the last decade basically kept oil prices under control. It basically masked or papered over the underinvestment we had done in the rest of the world. And so we'll have to see what happens. Again, you have constant demand increases of 1 million to 1.5 million barrels a day in the world every year, and 6 to 7 million barrels, 6 to 7% decline rates. And so if the Permian now has rolled over or plateaued, that's a problem. So we'll see how it plays out. I will say this, you got to give credit's due. Clean energy set a new record last year, or in 2023, and set to even expand further. Solar is one of the biggest beneficiaries. It's just so easy to put up and so quick that you can get it up pretty quick. So we'll see if this continues and what that means. But it's projected for at least 2024 to exceed, which was a record in 2023. So this is good for resource stocks because not only that, but the battery projects that are going up, here in Texas, solar and battery is just blowing up like mushrooms everywhere, popping up everywhere. So to the point where there's not enough skilled labor, there's all kinds of problems trying to get this stuff in. The supply chain, it's just a big mess. So as long as the free money's there, and there's going to be a demand, right? So this is cross-border capital, somebody else I follow on X. They mostly talk about liquidity. They're basically telling you what I've been telling you since last July or August, showing that 1/3 of world central banks are cutting rates now. What does that mean? That means liquidity is increasing. around the world. It's going to continue to increase, and I think that's going to have a positive effect on emerging market economies and on resource markets as more bank credit gets created, more liquidity that's going to eventually flow into these markets. And again, the heavy hitters like the Bank of China is coming big. I showed the Ronnie Stoffel chart that they track monthly or quarterly. The world central banks, they've basically reversed their tightening. I'm talking about in totality. Individual banks are not, but in totality, the constriction of liquidity has pretty much stopped and at least bottomed and is moving higher. And we're seeing more and more of these emerging markets. It's funny, I was watching on Twitter, I think it was one of the or X, one of the things people don't really know what they're talking about, and they're going to miss the boat on some things. It was amusing to me that somebody on this was like, "What is this? Doesn't mean anything, because the Fed's doing this." You got to look at everything in totality. The U.S. isn't like the empire in Star Wars that dictates everything to everybody else. It's a big component of the world economy, but it's a smaller and smaller component. And people are just missing the big picture. Again, I go back to one of the things I've said before. In the short to medium term, liquidity and sentiment is what drives markets. And as you increase the level of liquidity, that's going to have an effect on asset prices. When you constrict liquidity, that's like a gravitational pull on asset prices downward. So this is reversing. This guy was talking about this even a year ago. I listened to a podcast just when this thing inflected and nobody was listening to him. This is an obvious trend now. It's accelerating. We're seeing more and more central banks easing every month. I track it. So I know exactly how many central banks cut, how many central banks hold rates, how many central banks raise rates. And you're seeing more central banks month after month now starting to cut rates. That means you're into a new liquidity cycle. Wanted to point this out. This is somebody had the tweet or whatever they call it now. One of the things that I did learn from reading Jim Rogers and some other people, demography is kind of destiny. And what I mean is, population. This is the population of India broken down by age group. This is the population of China broken down by age group. And you see that you get here to this level where it's 30 to 34. As you get older, China has more old people than it has young people. India has the reverse. They have a lot more younger people than they have older people. The Indians are demographically set up for success. The Chinese aren't. And this is why that doesn't mean China's going to fall apart. I think Kyle Bass has been talking for 13 or 14 years about China collapsing. Maybe it will collapse. Maybe they'll be right. But in the meantime, I'm really bullish on India this is just one reason. Okay. Now, what's interesting is basically India is going to repeat what China did through its modernization, industrialization. It just won't do it on the same path or same, it'll take longer because China is a command economy and they have 5-year plans, and the CCP can dictate, back when they, to enter industries, they can force people to do stuff. China or India is a kind of a messy democracy. So the trend is in the right direction, but it's going to take longer. And you're just seeing it. I've talked about airline travel there. I've talked about, airports are good ports investment there. Talk about how they built out their road system. All of these things are cumulative to raise the standard of livings in India. And I just think that it's an excellent opportunity. And we do have a vehicle in the portfolio that is structured to take advantage of this. It's kind of off the radar screen. It sells at a discount to net asset value. No one cares about it. I have to say that it hasn't done much since it's been in the portfolio, but it does. That was also in the context of the pandemic and things like that. So I think it's if I can buy growing Indian assets run by people that have inside track to get private equity deals, basically, and get good deals, basically backed by one of the largest billionaires in Canada, then and I can buy it at a 30 discount to net asset value, I'm interested. It's just one of those things I just have to be patient and let the theme play out. But I wanted to point this out because this is important. This is one of the big factors of why I'm bullish on India and Africa. Africa has the same type of skew like this, and I think it's real. People are really sleeping on that. I'm doing more and more research on various ways to play it, and people have a negative view, I think, based on Africa of 40 or 50 years ago. It's totally changed. It's 50 some odd countries, and there's some well-run countries and there's some countries that aren't well-run. But I think that the momentum in these areas will carry them along. So I wanted to point this out. I put it here at the top, winning, exclamation point. Yay. U.S. budget deficit for December up 52% to 129 billion. This is from Reuters. It says here the U.S. federal government posted a December deficit of 129 billion. That's just in 1 month, up 44 billion or 52% from a year earlier as outlays rose while receipts fell from December 22 levels that were swelled by pandemic deferred tax payments, the U.S. Treasury said on Thursday. So you have revenue going down and spending going up. So of course, if you spend money you don't have, you can keep the economy, its head above water. But how sustainable is that? The Treasury said that outlays for December rose 3% to 559 billion, a December record, partly as a result of higher Social Security outlays and interest on the public debt. Receipts for the month fell 6% to 429 billion. So you have a lot of money coming in. You have $429 billion came in. I mean, I'm not going to get into a big, long discussion on what needs to happen because it won't happen. Again, there's no this is going to continue until it can't continue anymore, and then you're going to have a wreck in the economy. You're going to have a wreck. I don't know if it's, just because something's certain doesn't mean it's imminent. But this is something to keep on your radar screen. This is one of the reasons why we haven't really dipped into recession yet, because federal government's keeping this whole thing propped up with the amount of spending they're doing, but it's not sustainable, at least in my mind. So I wanted to just talk about this real quick. This will end the economics portion. If you are a regime person that listens to what the television tells you, this is probably your time to get off and not listen. So this is a guy named Gonzalo Lara. Basically, you may or may not know who it was. He died late last week. I'm not sure which day. Basically, the story on this dude is back in the day, he's done all kinds of stuff. He's kind of I found him to be very eccentric, but back in the day, he went by the moniker Coach Red Pill. He was in the manosphere. He was talking about dating. Some people said that he taught people how to exploit women in emerging markets. I don't know. I wasn't around for that. How I ran into him was when he surfaced during the Ukrainian war, maybe about this time last year or 2 years ago, actually, when the Russians invaded Ukraine, and he was in a hotel in Kiev and he was given play-by-play information. Now, long story short, at one point he was still married to a woman in Kharkiv. And so he went there. He had 2 small children, I think a 10-year-old son and a 7-year-old son. And so he started just blogging from Kharkiv. He was very critical. He's a U.S. and Chilean citizen, so he's a dual passport holder. He had a U.S. passport. He was actually born in the U.S., and I think his dad's Chilean, so he had Chilean citizenship also, which is important for what I'm pointing out. So anyways, he was reporting from there. He was critical of the Zelensky regime, critical of the United States, very critical of Victoria Nuland and a lot of the neocons by name. He was on a lot of spaces. He was on the Duran quite a bit. He had a pretty big following. Now, I had thought that it was knowing how the SBU operates and how things are in Ukraine, and the fact that they had murdered many, many journalists. The regime there had murdered or assassinated many journalists that were critical of Zelensky and the regime. it probably wasn't a good idea to just rely on your American passport that you could just say and do whatever you wanted. So at one point last year, I think it was in the summer, I can't remember, he was arrested by the SBU and he was brought in, and somehow he was released, but I think he was released and told basically keep your mouth shut, and stop, doing this. That probably would have been the time to leave Ukraine, but yet he continued making videos, reporting, saying things critical of the regime, critical of the United States policy there. And so he was labeled a Russia stooge. He was spying for the Russians, that people said. He was an asset of the CIA, all kinds of crazy stuff. And so he was arrested again, and he was arrested and he was released. And then he basically made a break for the border. He rode a motorcycle all the way across Ukraine from Kharkiv to like the border with Hungary. And he made a video where he said he was going to try to cross into Hungary and ask for political asylum. That was the last public video or that we heard of him. Basically, the story is that he was apprehended. He was remanded to prison. He was brought up on charges. And I think like last October, he started developing health problems. Recently, he had written his father had been on the Duran pleading, trying to get the story out. Basically, he had double uranium in both lungs. He had edema. There was allegations that he had been tortured and beaten. Basically, his health was deteriorating rapidly. From what I understand, he was taken out of the prison and put into a hospital, but it was too late, and he died last week. The point I wanted to tell that story and why I wanted to bring this up is, like I said, I found the guy to be eccentric. I don't know his whole history. I'm not judging the guy. I'm not praising the guy. What the point I want to make is this is a U.S. citizen. He was arrested by this basically regime, okay? And I was hoping they would just deport him all along and say, just get out of the country just because he was a U.S. citizen. They didn't do that. I think that he had a chance to get out of the country after his first arrest. He probably should have done it. I don't think he played this very well, but that's him. He's a full-grown man. I don't know what his motivations were fully to tempt fate like that, especially with these kind of radical people you're dealing with in Ukraine. I'm not going to use the N word, but let's put it this way: they're not playing around with dissenters. I know of many people that have been liquidated or called into question their loyalties just by having a message on WhatsApp back and forth with a relative in Russia. That led to detentions and extensive questioning and calling into question your patriotism. Anyway, the guy died, and what I find amazing is that all the State Department, his father at least, the Chileans tried to get involved and help as best they could. But, basically the Ukrainian current regime is a client state of the United States. All, Mr. Biden, Victoria Nuland, Tony Blinken, they all have blood on their hands as far as this is a U.S. citizen. The one thing that I had always thought about the United States, even with all the divisions we had, and we argue about politics, and we have different views on the future, when an American's in trouble, like in a natural disaster here in the U.S. or something like this, that we pull together and we do what we can, okay? Yeah, you could say the guy was an ass. You didn't like the guy. You didn't like his politics. He was being irresponsible doing what he was doing there. But in the end, all it would have taken was a phone call from any of those people or even people below them, and he would have been put on a plane and sent back. And that didn't happen. And so what I'm telling you is that, when I look at the current government in the United States, the deep state, even during, this has been going on for a while, your government, if you don't have the right politics, you're just going to get sold out. And I will tell you, I will say this, that the radical elements that you see, that you laugh at and you meme, if they ever get power, you just need to read what Mao did, what all of these communist revolutions, they will liquidate, they will get rid of anybody that doesn't toe the line. They have done it in every country. That's what they do. You will be dubbed a counter-revolutionary, a reactionary. This guy was just, the people that were lamenting his death, that were friends with him on Twitter, people were getting in the comments, well, he was a dirtbag rapist and all this crazy stuff. He was an American citizen, and the United States State Department didn't do anything to help him. Okay, that's just the bottom line. His dad would get on, his father's like 80 years old, pleading with somebody to pick up the phone and at least, go try to do something. They did nothing. They basically, I implicate this current regime in DC and Mr. Biden, Mrs. Newland, and Tony Blinken as being complicit in this man's death. So you could say what you want me. I don't care. Like I said, I didn't agree with everything this guy said. I thought he was a little bit strange and eccentric. I didn't know what he was actually doing. He was tempting fate. I thought it was irresponsible, especially if you have small children. Should have got out of the country a long time ago. And then you could say whatever you want from the comfort of your own home in the US or Chile and continue to lambaste that regime, which, you would have been in a better position to do. But you are not going to sit in that kind of country with that kind of political situation and do that. And so the United States dropped the ball on this, and they did it deliberately, in my point, because he made some videos where he was very critical of Victoria Nuland and kind of delved down into the psychology of why people like her and Tony Blinken think the way they do. I'm not going to repeat it, but it was very provocative. Let's put it that way. And so I kind of liked the guy. I have to say they had some stones. Maybe, like I said, it was not thought out well, and he maybe kind of brought some of it on himself. But again, somebody in the State Department had to do is pick up the phone. Because it's such a client state of ours, he'd have been on a plane the next day. And then, it's one thing if you want to say, well, you're in that country and you follow under laws. The guy was dying. People knew he was dying. He wasn't going to get proper medical attention. Something could have been done. And so until I hear otherwise, or somebody from the government proves that they tried to do all they could, they just, this Ukrainian regime that's under the thumb of the United States completely, just rebuff them, then I don't believe it. So I don't want to end on that unhappy note. I don't know anything about his children or his wife or anything like that. I hope they're well. I think that I had understood that they had been out of Ukraine and in Russia, but I don't know all the facts. But this is just an example. Your government doesn't have your back anymore. If you don't have the right political, and I think most of you realize that already, if you don't have the right political ideology and, salute what they want you to salute and go along with what they want to go along with, you're just a non-person, and they will do. This was death by inaction. That's all it was. They didn't go out of their way to hurt the guy, the U.S. government. They just didn't lift a finger to do anything when they had that opportunity, in my view. So I'll end on that note. That's it for this week. I thank you for your patronage. Again, Substack is roaring. I mean, there's a lot of people coming on board. I should have moved over there a long time ago. Feeling really good about 2024 and the growth of the channel and the growth of the subscription service. So, we send out the free emails weekly. That will continue. You can go on Substack and just sign up for the free emails that come out. There's a lot of good information in there. We talk about a lot of these themes, but the paying subscription is where we really drill down into the particulars of how you can take advantage of these themes that we talk about on these videos. So I encourage you to do that. All right, guys, that's it for this week. We thank you, and we'll talk to you next week.